Hello everyone from across the plane. I just wanted to make a video on why you should stop doing Elliott wave counts. Gasp! Adam, why are you talking about stopping doing Elliott wave counts, man? I thought you lived for that shit. So Elliott wave counts, what they're gonna do is they're just gonna fuck with you. And there's a few simple reasons for that. I brought up the weekly chart. We're gonna look at a few weekly charts. Is because you'll not your Elliott wave 1, 2, 3, 4, 5, your perfect 8 wave cycle works very, very well. That just standard cycle works very well in the stock market on blue chip stocks because they never had like a real bear move like something like this. You don't really see that. Maybe a few companies, but if you're looking at like the index, the Dow, or the S&P, you don't really get those. You get your 5 wave structures and your ABC, and then another 5 wave structure, ABC, because it's hard to explain. So currencies, you can see it's a little bit different. Is if you're looking at the entire time this has been traded, I guess FXCM started trading, having this pair tradable in '01. I'm not exactly sure on how late it goes, but when you're drawing your 1, 2, 3, 4, 5 ABC, you're going to have a bad time because the data is dynamic and structure can change, and you want to basically be trading what you see. And a lot of people think that wave theory or wave predictions are like you're trading based on a prediction, and that's not the case at all. I post, very logical, practical setups, and if I take the trade, I'm going to set my stop loss to break even, generally after 20 to 30 pips. And if it takes me out, it takes me out, or I might take a small loss. If the structure doesn't develop exactly the way I'm thinking, I'm not going to hold on to my trade. I mean, I see people going 80 pips drawdown, 100 pips drawdown, 200 pips drawdown for trades. I mean, that's just absolutely ridiculous. You shouldn't have to do that. So make no mistake, Elliott wave trading, you're not trading a prediction, you're trading setups that you see. Now, you'll hear me post a lot of times that the lines don't mean anything, and they don't. It's the structure that makes it up. And I just wanted to show you how neat that flags or minor degree corrective structures work. So you have your impulse, start correcting, you have your another impulse, you get a bigger correction, impulse, correction, impulse, correction, impulse, correction, impulse, and then what the hell happened here? Well, probably a variety of different things, something to do with New Zealand's economy, or maybe Japan was doing well. That's not really what matters, but when you see something like this, you start like an impulse, and then you have maybe a 1, 2, 3. Now that could be basically a running flat. So you have like or a contracting flat, whatever you want to call it, where you have 1, 2, 3, and then you get your next impulse. And it broke this right here. Pull this up. Broke this right here, which would invalidate your first impulse and then your correction. But hopefully they would have seen that when it was dropping like a rock over here. And now we're getting some more movement here. So you have an impulse. Then you get this mess. Like, look how nice this all was when it first started out, right? Very simple, basic. I mean, this is something that you place 3 standards at the time and just hold it, right? Until if you're rich. Now you got this mess right here. We have this mess right here. So we have impulse, correction, impulse, correction. Now what's going on here? Now I'll basically view every structure on the weekly and daily first, just to get an idea of a couple possible outcomes. Now, I like to have a certain bias where I'm trading setups based that way, but I'm not going to be ignorant to the possibility of something else happening. And like I said, if it's not going the way you want it to go, the way you think it's going to go, don't be in the trade. I mean, just cut your loss and take the next setup, because there's nothing worse than losing 100 pips on a trade, losing 200 pips on a trade, 300 pips on a trade, when you could cut your losses short, use that capital for a different trade where you're actually going to make money on, instead of tying up all your capital. Now what we're going to do is check out some of the fractal nature here in the market and possibilities of what can happen. So we're going to look at some of the possibilities that can be happening. Now, let's see here. Like I said, the market's a fractal, so it's basically things within things within things within things, right? If you want, you can Google fractal. There's a couple cool documentaries of them. Some people look at space as a fractal. I think that shit's fake because it's all animation. Fractals do appear throughout our nature and what we can see here on Earth, though. And humans are pretty predictable, as we say, and the stock market or any financial instrument that's heavily influenced by human, you're gonna see repeatable patterns that happen. I'm drawing these trend lines here just to show you another possible outcome. Could it be making a possible bigger 1, 2, 3 wave structure coming down to here and then go up? It could be, possibly, but I would never trade the weekly chart because you don't have any idea of actually what's happening in real time when you're looking at the weekly chart. So let's remove those and go to the 4-hour. We're going to start back a little bit here on the 4-hour. From basically right here. And we're going to go through a motive cycle here on a shorter time frame. So you have your first impulsive move here. And then you start to get that sideways motion. So let's see. I like to draw my trend lines wick to wick, just because you'll get most data basically within those lines. And once again, guys, the lines don't matter at all. What matters is the patterns that price creates, that humans create based on exchanging money, or selling, or buying, blah, blah, blah. Humans make this shit, not a EA or a black box. All right, so you have your first impulsive move from here to here. That move was 761 pips. Now, who cares if you missed it, because when it starts correcting, that's when you have your second chance. Now, when I was, I posted a few ideas actually on this pair when I was trading harmonics, and it didn't really work too well. And that's another reason why I stopped trading harmonics, because it is too subjective, just like drawing horizontal lines all over the place and saying, this is a good area where price might turn. So what happens, you have one wave up, and then you have a 3-wave correction where it goes 1, 2, 3, and boom. This was a Trump rally, I believe right around here in November. All right, so this would be a flat. You could call it a regular flat or a contracting flat. This could have, so two potential things, it could have made a 1, 2, 3, 4, 5, and then went up, made a triangle, but it made a 3-wave correction, which would be a flat. So a 3-wave correction, so you have wave 1, motive wave 1, correction of the motive wave 2, motive wave 3, and now we're in correction of the motive wave 4, which appears, which looks like we're in right now. So once you have this move, impulse 1, correction 2, impulse 3, and then could we have potential the potential correction 3 here. I'm sorry, motive wave 4 here. It's looking like it's making an ending diagonal here on a lower time frame. Now, this whole structure might be invalidated if we get a break past here, consolidate, a bearish consolidation here, then I'll be looking obviously for the sell from that point. But while this structure remains intact, I'm looking for a buy, and this would be the final time. Like I said, you have to know when to give up on an idea, and this might be when you give up on an idea, but it's still valid for right now. So you have 1, 2, 3, this could be your 4th, and then for one more 5th wave up, complete your 5-wave cycle on a lower time frame. But the labeling is not important. So you have the impulse, you have a flat, you have an impulse, you have a flat here that's developing the C wave into a diagonal. And I'll show you what I mean by that here in a minute. And I'm also going to include basically some Elliott wave links as well on basically where you can start looking at the structures, blah, 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 all that. I'm going to go over to Elliott Wave International. I'm sorry, ElliottWave.net. Anyway, you can get, this is what I like to view. I also have the principal book. It's like 300 pages and tons of info in there. But let's see, we're looking at the diagonal, wedge, or triangle. So any diagonals for the type of fifth wave one has gone too far, too fast, how they put it, a small percentage of any diagonals appear. So very small percentage of ending diagonals appear in the C wave position of the ABC formation. So let's go look back at the chart. Go and forget this other shit right here. Let's just focus on you have an impulse and now you're going to be making your correction. So let's see here. You'll have your A, B, possible C. Now I posted an idea on TradingView a while back ago. Basically look for the flat to go. Basically look for this one to go, and what do you know, it didn't. And that's why you want to be able to view the trend, or view the larger structure, shouldn't even say trend, but view the larger structure from all time frames. That way you might have an idea of if one fails, what it could be doing next. Now the diagonal triangles or whatever, the diagonal wedge, the ending diagonal, usually pretty impulsive in nature, where you have a pretty strong impulsive move going down here, which, let's see, there's a lot of pips, 700 pips coming down. So should have held right up here, but I didn't, and now I'm looking to get into the long and capitalizing off of that. So if you've studied your diagonal structures or whatever, you'll see that they have like very impulsive in nature, like I said. So you have your 1, 2, 3, 4, and then from here you're going to have 5 subwaves within that. So let's see, possible 1, 2, 3, 4, 5. And then it broke the bottom of the structure, which is expected. This would be your quote-unquote overthrown ending diagonal, as they call it. Now, when that happens, generally it's just, wanting to take out stops, pushing one move lower. As you see, it's kind of coming back up now. So that looks good from here. Now, what I'll be looking for is some type of lower degree correction. If that happens, then I'm going to be buying. So this comes back down to trading what you see and not trading based on a prediction. If anything, with trading on a prediction, whatever, any trade, to me, any trade's a prediction when you place it, because you're either predicting that price is going to go up or price is going to go down. Now, when people say that when you trade waves, that's trading only prediction, blah, 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 that's, even though I don't believe it, that because everything's prediction, I'd say trading the waves is a lot less predictive in nature than trading a, let's see, this is a little bonus, trading I lost it. Trading a that's not probably a perfect harmonic pattern, but this is trading predictively. I mean, if you're using your fib levels and just set an order at that exact fib level, then that's trading based solely on predictions and not what you see. And if it goes up, then it'll go up, then it'll go up. Because I did the same thing, and I'm sure Some traders do the same thing that I did when I was trading harmonics. If it didn't hit that one Gartley, then I'm going to go up to bat, then hit that, then crab, blah, blah, blah. So they just are very subjective and don't give you really like a roadmap to the markets. But now let's see if we get this correction and the next impulse. And here's a bonus too if you want to keep trading harmonics. Let me bring this one back up. Blah, blah, blah. Like I said, this won't be a perfect harmonic, but you'll get the idea. Now, let's say you get your CD wave and it's impulsive, strong like this, and then you see something like this happen, something like a flag happen after it breaks your pattern. If you see this happen, that's a good indication on get out of that trade absolutely right now, because it's probably going to go the other way of what your animal says it's going to go. Now, got through with that bonus little criteria thing there. These damn critters, man. They look cool as fuck, but I just haven't really had the best luck with them. Now, let's see what happens here. Will we get this move going up? Let's find out. Maybe, maybe not. Because like I said, if looking at the weekly structure, it still could be making a 1, 2, 3, then up maybe, or 5 waves, and then up, who knows. But the shorter time frame is definitely looking bullish to me, especially with this right here. Divergence, especially when you're getting multiple waves of divergence, is very, very good sign that the move is about to reverse. And you can check that throughout many, many charts and see that's kind of what happens. Let's go look at UJ real quick. So UJ on the 240, I was saying that we're going to get to 108 roughly, which we're getting close. So you have your one, impulse one, and you have a 1, 2, 3 potentially. It's going to make them more, basically it's a 1, 2, 3, and you get your next impulse. And now, if you draw your trend lines, this is how you see that it's fractal in nature. Now, if you're looking at this on a 1 hour or 15 minutes, something lower time frame is definitely going to see bearish. I mean, obviously, I'm still bearish on it right now, but I'm not going to be looking for any more sells, really only looking for buys at this point. We're getting pretty close here. You can draw them like that. I don't really do that. I look at the fib levels. So I posted a while back ago, watch for sell, basically 5 days before it happened, of impulse C here. So you have your A, B, C. Let's see. So you have first impulse, this was like 600 pips of the correction. Now you have this correction, and then this is your impulse C. How I get my 108 from is Fibonacci expansion, just from A to B, which basically 108 around there is 1 is the length of this impulse here. So that's how I get that. Is that going to be exactly where it turns? Absolutely not. And that's where you go into not trading predictions, but trade what you see. So once it gets to that level, if you see a move sharp like that, and then you start the correction, I'd want to get in from down at the bottom so I can rack in them pips by. And that's basically why you don't want to do your wave counts, because when you do your wave counts, your 1, 2, 3, 4, 5 ABC, you start to get it in your brain that the book is, the cycle is religious, like it's something that is definitely going to happen every time. That's not the case. I mean, when you start to treat science as a religion, shit starts happening where the whole world ends up becoming brainwashed. That's kind of what's happening now. That's a different story though. So don't treat the book as a religion, treat the book as, treat the theory, whatever, treat the way of trading, treat it as a strategy, obviously, that is, very accurate on terms of how the waves play out. And if structure changes, don't get married to your idea, basically. So when you get married to your ideas, I've done it in the past, and I know people that'll still do it today. They'll end up, taking trades again and again on, bearish trades on a bullish setup and vice versa. And that's just something that you don't want to do. And I hope you can see the fractal nature here of the market. So you have your one, and now it looks like it's coming into a downtrend. But what happens? You get your next one up. And now it's coming here, looks like a downtrend, but soon enough it's going to turn to the top. And here is another clue too. So you're starting to have divergence on the 4 hour. It's kind of funny when you're looking at it. It's hard. I like zooming in because it's easier to see it. But you see we have this one. This was a lower low, but the oscillator made a higher low, and this one coming down is a lower low as well. So you have right here, lower low. And let's see if we get this one. Obviously, it's already going to be a lower low, but let's see. I'm thinking pretty soon we're going to have some bullish evidence, and then we're going to the moon. Let's see. Aussie, we'll look at a few more while I have spot. Aussie USD. It's going down nicely. So look how well this fit the description, right? So you have, this is kind of tough, but you have like 1, 2, 3, 1, 2, 3, 1, 2, 3. Now we're making here this move come down. So this could potentially be a triangle. It doesn't look like it's flat anymore. So you have impulse 1, 2, 3, 4, 5. Lower here is probably where we're going to get our next impulse. And is this the start to a 5-wave Elliott cycle? I'm not exactly sure, because if you go back and look at weekly, you'll see that the market is a fractal. So you have this impulse right here. Potentially we could have something like this, right, where we break past here and then get this move down. So that's what I mean by the market's dynamic. The market's a fractal. Structure can change. Don't get married to your setups. Don't treat Elliott Wave as a religion. Treat it as a practical trade strategy where you identify corrective structures and try and trade within them. Like I mentioned previously in the video, you can trade within them if it's a big enough structure. So on a weekly structure, you can buy and sell this and make 500 pips each way. I'm looking for 500 coming down here. Then I'm also looking for quite a bit more when we get our E point down here, if that's what happens. Some other interesting ones. Grand British Pound USD. This one's kind of interesting too to me right now because on the 4 hour, you're making a flag here, which looking at the pound, it could be 2 different ways. It could be a 1, 2, 3, 4 triangle, but the E point here on the triangle didn't exactly touch the trend line, which isn't too important, but it didn't come down impulsive, it came down corrective. So this could be making basically the flat I was thinking of a 1, 2, and then this whole entire thing would be a complex C wave pretty much. So A, B, C. And let's see, that's about it. Euro yen, this one I don't think is actually going to go the way I'm thinking, so dropping that for right now. It could have been a 1, 2, 3, 4, but this seems to be invalid here at this point. So I'm staying out of this one. Another great advice: when in doubt, stay out. And if you have any questions, let me know, or go to the Elliott Wave. Go to the ElliottWave.net. And that'll take you to everything really you need to learn about it. I wanted to come back and revisit this though before I ended the video, because I wanted to. There's another possible setup or way it could go too. So, and then it could also not do anything that I'm expecting. You could have your 1, 1, 2, 3, 1, 2, 3, 1, 2, 3, whatever. So you have your A, B, C, D, and then it could be making the E here. So if you see we have this A, B, C, D, this D wave coming down, you have like a 1, 2, 3. Now what if we're making a 1, 2, 3 here? So two possibilities that I'm seeing is, it seems like this is going to come back no matter what here at this point. Will it come to that, do the triangle, or will it come to here and do the flat? Those are the two kind of ways I'm looking at it. So hopefully this kind of made sense a little bit, and why you shouldn't basically do Elliott wave counts. You should focus on the structure that's happening now on the 240 and identify that and try and trade the next basically big moves that come. So you have one impulse, 1, 2, 3, get your next impulse. Now we're making a little bit more of a complex structure here. Let's see. I want to show you this too on a lower time frame. It broke this structure here. Saturday, broke that structure here, and now it is consolidating in another form of a bearish structure. Or, I'm sorry, bullish flag structure. So let's see. I'm probably, if I see good enough evidence here, I'm probably going to take this long for a quick day trade to supplement my account. So, I do mostly swings and positions, so I need to get better at taking trades that can have good risk reward here on the daily trades or a couple day swings. All right, guys, hope you enjoyed it. Any questions, let me know.